Welcome back. If you're an NRI tuning in, you probably care about keeping up with your Indian income tax obligations.
Absolutely. It's a key area.
So today, we're doing a deep dive into the different ways you, as an NRI, can voluntarily file your income tax returns in India.
Right. There are a few scenarios people find themselves in.
Exactly. Maybe you're filing on time, maybe you've missed the deadline, maybe you found a mistake after filing, or perhaps you haven't filed before and want to sort it out now.
All common situations.
We'll cover the options. But just a reminder up front, everyone's situation is unique. For advice specific to you, the experts at Tax Acceler are a great resource. They actually offer a free first consultation.
Definitely worth reaching out if you need personalized guidance. Okay, so our mission today really is just to clear things up, give you, the listener, a clear picture of the timelines, the possibilities for voluntarily filing your Indian income tax.
Sounds good. It's all about knowing what's possible. So where should we start? The basics, maybe. The standard timeline.
Yeah, let's set the scene. What's the absolute baseline deadline folks need to have marked on their calendar?
Okay, so generally, if you have income that's taxable in India, the standard due date for filing your income tax return, your ITR, is July 31st.
July 31st, right?
July 31st of the year, right after the financial year ends. So let's take the current financial year, running April 1st, 2024 to March 31st, 2025.
Okay.
For that year, the normal deadline would be July 31st, 2025. That's your target for filing on time.
Right. But, life gets in the way sometimes. What if that July date just passes?
Yeah.
Are NRIs who miss it completely stuck?
No, thankfully not. There's a bit of a buffer. The tax rules allow for filing what's called a belated return.
Belated return. Okay.
It lets you file even after that standard July 31st deadline. Now, the window for this, it usually extends until 3 months before the end of the relevant assessment year or before the tax guys finalize their assessment, whichever happens first.
Okay, so how does that translate for our example? The 2024-25 financial year?
So for that financial year, which corresponds to the 2025-26 assessment year, you generally have until December 31st, 2025 to file that belated return.
December 31st, so a few extra months.
Exactly. But, and this is important, filing late could mean you end up paying interest on any tax you owe. So it's a safety net, but maybe not a free one.
Right. Okay. Good to know there's an option, even with potential interest. Now let's switch gears slightly. Say you do file on time, or even within that belated window, but then you realize, oops, mistake.
Ah, yes, the oops moment. Happens to the best of us.
Maybe you forgot some income or just messed up a calculation. What happens then?
That's where the revised return comes into play.
Yeah.
It's specifically for correcting inaccuracies or omissions in a return you've already submitted.
Okay, so you can fix it.
Yes. And
Yeah.
the time frame for filing a revised return, it actually mirrors the belated return deadline.
Oh, interesting. Same deadline.
Yep. You can file a revised return up to 3 months before the end of that assessment year or before the assessment gets completed, again, whichever is earlier.
So for our 2024-25 example, that's also December 31st, 2025.
Exactly. December 31st, 2025. To submit a revised return fixing any errors for the 2024-25 financial year. It's a really valuable tool for, making sure everything's accurate and compliant.
That is reassuring. Knowing you can correct things is huge. Now, here's something that might raise a few eyebrows. I heard there might even be a way to file for past years under specific circumstances.
Yes, that's right. This is a relatively newer provision called the Updated Return, or ITRU.
Updated return. Okay, tell us more.
So this is designed specifically to let taxpayers, including NRIs, file a return voluntarily even if they completely missed filing one originally for a past year.
Wow. Even if they never filed at all.
Correct. Or if they did file original, belated, or even revised, but now realize they need to correct something further, like unreported income.
And what's the time frame for this? How far back can you go?
It's pretty significant. You can file an updated return for up to 5 years from the end of the relevant financial year.
5 years? Seriously?
Yes. So right now, as we speak, this option is available for the financial years 2020-21, 21-22, 22-23, and 23-24.
Okay, so 2020-21 up to 2023-24. That covers quite a bit of ground.
It does. So if you had income sourced in India during those years that maybe slipped through the cracks or needs correcting, the updated return could be your route. But anything before the 2020-21 financial year, that window's closed for voluntary updated returns now.
Got it. A 5-year look back is substantial, though. What are the sort of key things an NRI needs to know if they're thinking about using this updated return for a past year? Are there catches?
There are definitely conditions, very important ones. First, and this is crucial, you can only file an updated return if it results in you actually paying more tax.
Oh, okay. So you can't use it to claim a refund you missed.
Exactly. No refunds allowed via an updated return. You also can't use it if it just decreases the tax liability you already declared. The whole point is to allow people to come forward and pay tax they should have paid earlier, plus penalties, of course.
Okay, so it's for paying additional tax. What else?
Second, you only get one shot per year. You can only file one updated return for any specific assessment year. Once it's filed, that's it. You can't revise the updated return.
One chance to get it right for that year.
Precisely. And third, this whole option is off the table if the tax authorities are already looking into your affairs for that year.
Meaning?
Meaning if they've started any kind of search or survey or sent you a notice about your income, or if an assessment or reassessment process is already underway or finished for that particular year, you can't then file an updated return for it.
Okay, those are pretty significant limitations. Makes sense, though. And you mentioned penalties. What are the financial consequences of filing an updated return, potentially years later?
Yes, there's an extra cost involved beyond just the tax owed and any regular interest. It's called an additional tax.
Additional tax? How does that work?
It escalates based on how late you are. So if you file the updated return within, say, 24 months from the end of the relevant financial year.
So within 2 years after the year ended.
Right. Then the additional tax is 25% of the total tax and interest you have to pay.
25% extra? Okay.
If you file it later, say after 24 months, but within 36 months, so between 2 and 3 years late, that additional tax jumps to 50%.
Wow, doubles.
It keeps climbing. File it within 48 months, 3 to 4 years late, it's 60% additional tax. And if you file within the maximum window up to 60 months or 5 years late,
Let me guess, higher still.
you got it. 70% additional tax on top of the tax and interest.
Ouch, 70%.
Yeah. So as you can see, while the window is long, the cost of waiting gets progressively steeper. It definitely incentivizes addressing any past issues sooner rather than later.
Okay, let's try and pull this all together then for you, our listener. The standard deadline, ideally July 31st. Miss it. You usually have till December 31st of the following year for a belated or revised return. It's for the 2024-25 financial year example. But the really big one we talked about is the updated return. That gives you that potential 5-year window right now, covering 2020-21 through 2023-24, to fix things or file if you didn't initially.
That's the key takeaway on timing.
But, and it's a big but, remember that updated return means you must be paying additional tax. No refunds, no reducing liability.
And it comes with that escalating additional tax penalty, from 25% right up to 70% the longer you wait. Plus, it's not available if the tax department is already involved for that year.
Those conditions are critical to remember.
Absolutely vital.
So this really does bring up an interesting point for you listening today, doesn't it? Knowing you might have this option to update returns for several past years. Well, what does that mean for your financial planning? For managing your India-sourced income?
Yeah, it could present opportunities or maybe highlight things that need attention. Definitely food for thought.
It really is. But, as always, we have to stress this. What we've talked about today is general guidance. Tax laws are complex, they change, and everyone's situation is unique.
Absolutely. Your circumstances might have nuances we haven't covered.
So please, we strongly advise you, talk to a qualified tax professional. Someone who understands NRI taxation specifically. They can give you advice tailored just for you.
Couldn't agree more. Personalized advice is key here.